Friday, July 7th, market analysis. Stan Ehrlich, good morning, 10 o'clock California time, about the middle of the trading day. This is usually when I make my YouTube recordings. And I always start out with the stock market indexes, specifically the S&P 500. So yesterday we talked about the extremely rare 3-day island top in, well, all of the major indexes, the ones that follow SPDR, DIA, and QQQ. So the SPDR and the DIA in particular have this formation at an important point. The double top is still there. That would be the early part of last week that we formed on Friday's rally high, the high that created this possible double top. Now, we have rallied this morning completely enough to not only close the island top gap area, so now it's not an island top anymore. It was, like I said, extremely rare, so the odds of it working as normal island tops would work were rare, and it didn't. It's not. Plus the fact that we have rallied up enough to get back to the low of the day before yesterday, Wednesday's low, and that allowed a down gap and the island of 3 days. But all that's gone now. We went down enough yesterday to close the gap from going up to create the double top. And today we go back up again to close the gap that occurred yesterday on the way down. So both gaps are closed. And I keep mentioning gaps are almost always closed. They're like a black hole in space that tend to suck the price action back into it. And here we have two in the last few days. Okay, so what about this double top? If we close above the highs of Monday, Friday of last week, the last business day of June 30th, we will have a major upside breakout, but it needs to close above 40, I'll say 440, 450. 444.50 is going to be good enough, just as long as it's above there. Now we're at 250 and already up almost 3 points. So that would make it a 5-point up day, which is pretty strong lately. We've begun to see volatility increase a bit with 5-6 point down moves that didn't necessarily stay there, like yesterday, and up moves like toward the end of last week. So volatility is generally increasing in the last several days, and gaining 2 more points, is it going to happen, is the big question. I don't know. I'm going to have to just leave you with that information. Again, a close above 444.50 on the SPDR would be very bullish, especially on the weekend, at the end of the week, explanation point. Now, what happens if this gap has been closed? Yesterday's down gap is now closed, and we are looking at the rally high for the day, which I think is plausible. It's not out of the question at all. And it starts to turn back down again, and we start to get below yesterday's low. And that would be at 437. 437 is good enough, real close. So between 444 and 437, we have approximately a 7.5 point swing that we're getting trapped in. Breaking down below the low of that little range I've just dictated would be a likely test of the lowest lows we've seen for the month of June. And that is going to get a little bit more serious, because finally I would get my downside move to 423 I've been talking about for weeks, to close an old gap back there. Probably that happened. Again, we need a downside breakout below 431. In the meantime, it does not seem to be stopping, and we are gaining upside strength and momentum lately. Although That's how you get too overbought too quickly. And looking at this 1 minute chart, our little spike here in the last half an hour or so is right up against a bunch of little lows during that triple top formation, or 3-day island. It's not there anymore. So I would not be surprised if this would not be the ballpark at which it would stop rallying and turn back down. I'll even give it up to 443 flat. That looks a hair more interesting, actually. Okay, so I'm between a rock and a hard spot, period. I got to wait for a little evidence of which one's going to start working out. We're not very close to being overbought. There's nothing there to tell me there were anything but testing resistance. We have a rally in the DIA, of course, and we're high and last, basically like the spider, but we're not even above yesterday's high. And the 3-day island top still persists for the DIA only. So today is actually a doji inside trading range day so far. The low was close to yesterday's low, but not below. And then we pop back up to where we are now. Again, another big shove to the upside in the indexes overall is going to be interesting, because it might just be able to close the gap on the DIA and start to fail. A little bit more strength in the spider would get to a number I just mentioned a few minutes ago, but we are still, like I said, high and last. This thing is not stopping. We are actually making new highs by a few ticks as we speak. All right, the QQQs. Remember that ever since October 13th, when the Ehrlich reversal picked the low of the move, and when I talked about the October lows weeks, months in advance, that was a whopper. It's going to be a long time since I do something like that again. Now, they just don't come around very often. That was once in a couple of years, and approaching a year since. And we are high and last for the bull market of 2023, essentially on the average, recently, in the last few weeks. Okay, so the Qs have been going up the fastest, the bestest, the everythingestest, going down the least, the smallest percentages, gaining more ground more quickly, et cetera, since October 13th. And it's not stopping. So we're back up to almost the highest close we've been right now on the QQQs. And anything above this would be a potential new high close for the trend. But that is not quite good enough. I know a lot of people like to see that, and I do too. But we've been up here before as far as the rally highs have been concerned, at least 1, 2, 3, 4 times before. 4.5, 5 times before, and stopped. So this time, will it do it again? It could. It's resistance, and that's exactly how double, triple tops form. But it's not. It's right there right now. So I don't have any indication so far that it's going to turn back down. What does the 1 minute chart look like? Same as the other indexes, extremely strong, very quickly, and right up into a little area of resistance at the highs right now in the last few minutes. So, gosh, that does seem interesting. Nevertheless, I'll talk about the Russell 2000 for a moment, and then we're going to go to futures. And I got something to show you on bonds. It's going to be great. The Russell 2000 has closed its downside gap yesterday. There was no triple day time frame island top period. It just simply went up into resistance. Classic. Got extremely close to overbought. Too bad it didn't get overbought. Last time it was there, it did. And we had a bearish engulfing at the top of the rally. There was only a 1 week break, but it was pretty decent. And now we did it again a few days ago. Are we going to do it a third time? Third time's the charm. I don't know. This is looking more and more bullish as I talk about it. Unless it turns down right away. I mean, before the close. Okay. Futures. We start out with the spider, the E-mini, that is. It's the same, except for the trading hours cause slightly different signals in the E-mini than the SPY, which would gap up and down more frequently, and the spider doesn't, E-mini doesn't have a chance to do that. It's basically closed for a little more in a day on the weekend. Next chart is gold. This is a little out of sequence. I should have had bonds in here. A little rally in the gold market, still coming up to slight bit of resistance. I'm expecting it to challenge at least, if not make new lows for the trend down, and probably get down to the area of 1,850. Next chart. We did have a sell signal 2 days ago in natural gas, and it looks a little like a very small head and shoulder top. Let me draw the line for you real quick here. I haven't drawn it in yet, except for right now. And there it is. So the first shoulder, we got a bearish engulfing. Yeah, our sell signal didn't do all that well. Very, very small formation. Hit a low the next day, came back for 3 or 4 days and made a top in overbought condition at resistance. Absolute classic. So it slipped back down again a couple of days and started to flatten out and had another rally about 4 days after the high. And 4 days before the high, you also had the rally high with the bearish engulfing. This shoulder is maybe a couple days fatter, but not necessarily, because you went sideways one before and then during the day somewhat in that range. So here we have 1, 2, 3 also, and then another bearish engulfing. Yeah, 2 days ago, Wednesday, a downside breakout yesterday, and today almost 100% of the range of the day is below the line, neckline. If this pattern is good, and so far so good. I mean, we're low and last. We're looks like making a new low closing price since the whole formation developed. This is a good formation so far. All I need is another little lower close below the low of the lowest low of the formation, the beginning of the neckline. And then the minimum downside objective is going to be measured from 2,940 down to 2,6, let's call it. 300, breakout here, 6, 230, 230, but somewhere around the lowest lows in early June and in May. So a hell of a lot of support down there, and that would be approximately the minimum downside objective. But what's the bigger picture here? Uh-oh, bearish, definitely. So a move down to where I just said could lead to a major long-term perpetuation of this long-term bear market, which was a head and shoulder top that worked fabulously well. I just outlined how this one is panning out in the last, 3 weeks probably. This one is much more typical in size. Okay, sorry I spent so much time on natural gas. Bonds, futures. I have another chart to show you that's identical to this one, except we're measuring some time frames on this, and I started talking about this 2 days ago because today is the day. Now I'm going to switch to the Ehrlich Cycle Forecaster. This is special custom code for TradeStation, and it produces a time frame around, we call the window of opportunity, the cycle low and high potential time frames. You can adjust where these colors are, how thick the bars are, shift everything right and left independently or combined, expand or contract the spacing between all of them, a myriad of things that are possible with this tool, other than the standard stuff that's mostly in other trading platforms. Very, very flexible. I'm the one that invented the Ehrlich Cycle Finder in 1977. So this is my electronic version, currently TradeStation. It'll be in NinjaTrader also soon, but keep your eye on the green cycle lows. Actually, I'm going to talk about both. So this is supposed to be smack dab, ladies and gentlemen, in the middle of a major cycle low. I am thinking today is the exact day if we're going to have a bottom. It should be, but it could be a few days from now, still in this window of opportunity, the green bar. And that's about 4 days to the future, and it was 4 days backwards. What about the previous cycle low? Is exactly to the exact day on time, March 2nd of this year. What about the one before that? Oh my God, I don't think I've seen this in years and years and years. That was exactly on time, October 24th. So now I got to tell you, we're not going to be quite as exact, but we even had a bullish engulfing ER buy signal at the bottom of this break, and it was inside the window of opportunity 1 day earlier than exactly on the right day. Now that's 4 or 3.9 out of 4. What about the previous cycle low? It was almost in the window of opportunity, one day late or on the edge. We did obviously have a decent buying opportunity. It wasn't quite exactly on time. And the rally was no big deal because we were still involved in a bear trend. Let me review really quick to the cycle highs. If you sold it during the red bar at the top, you would have made money. And here, not so much so because the market actually bottomed out. So that's an inversion. This was okay, but too bad we didn't pick the top with the cycle, but we did pick the top with a bearish ER sell signal to the damn day. This was not particularly good, and I'm just going to slide back a little bit here to show you the last cycle high was almost exactly on time. The previous cycle low was in the window of opportunity. The previous cycle high was almost exact. Well, it might have been exactly on time. The next cycle low was a darn good one, the end of a sideways movement, beginning of a rally, not the lowest low there. This cycle high is not a high and turns out to be basically a bottom, so that's a mistake. This cycle low was not too good. You had a very small opportunity to make some money. Cycle high, good. Modestly good, not good. Remember, your stops are going to be relatively close, so you won't take any large losses. Profits, we hope. In the window of opportunity, we have a sell signal on the top of this gigantic rally, which was just after a major great pick for the cycle low and even the cycle high before for that. So I'm not going to go any further. This same rhythm is in the 10-year notes, the next chart. And of course, today, oh, I see, we're not making a lower low today like in bonds. Interesting. So maybe the cycle low, which is supposed to be today, was for the lowest low for the move yesterday for the notes. That could be how it turns out. Next chart. So I'm looking for a turnaround, obviously, in interest rate futures to start rallying. Various reasons, including cyclicality. 88 days, I think, is a cycle, 88 trading days from low to low. Crude oil, rallying nicely at the moment, support held. It has elbow room to go up into the range that it was trading in December, January, February, March, April, a long time back. And it could get stuck in that range and even rally up to 83. Since we're beginning to clear these minor new recent highs for the last few weeks, it looks like it might have upside momentum. We're not overbought yet either, but long-term bearish. Heating oil, long-term bearish, and the same kind of comments go for today's activity, able to get up to and through some resistance and has a little bit more elbow room until it turns back down again, I'm expecting, and not quite overbought yet. So yeah, that looks very probable that it's going to move a little bit higher and then start to slip back down. Next chart is silver. And this is that incredible double top with a complementary sell signal right afterwards that we caught. I talked about it the day it happened, each day that they happened, and the bottom of the break. And what do we got now? A little bit sideways to slightly higher. This is very typical, slightly upward slanted channel for the last 3 weeks or so. I think this is going to turn back down again pretty soon. Upper slanting channels are typically bearish, especially if they're in a bear market. You could make a case for a channel over here too. Not quite as nice looking, but probably some relatively parallel lines across bottoms and tops. Next chart, platinum got oversold quite substantially, very, very substantially, coming down to 10 or 11. So I won't be surprised if we stall out for a little bit longer, but I'm basically bearish. I don't think this bear move is over. I think we just did too much too quick to the downside going flat here recently. Next, so looking for new lows in platinum, high grade copper, bouncing a little bit, sideways range developing, big resistance in the ballpark of 390, 3.9. And so it could rally up there, which isn't very far away. But the key here is to start closing below 3.67 And that would probably put pressure on the market to test the lows of the whole trend down and maybe make new lows. We'll see how it develops. If it does, and I do think it will. Next, this top in soybeans fascinates me. Before it happened, I started talking about it getting overbought at major long-term, basically 1 year previous highs. After a year ago, soybeans didn't do much. They just went up and down and up and down. And now in the last week, they punched away at that old high a year ago and couldn't stay there. It's not a good sign when you go through important previous highs or lows and flip-flop right back again in the same range you were trading in before. So in an overbought condition, no less, we have now been going down 1, 2, today's the third day down. We could start gaining downside momentum and come down even faster. We are entering the first little layer of support that I had mentioned. So I got to watch to see if there's any kind of flip-flop back up again, but I don't think so. I think there's a good chance we could come down a pretty penny next week. Next, bean oil, same comments. Resistance area, maybe even a little, right in the area. And overbought, turning down to yesterday, first day down, today, second day down. We got lots of downside potential momentarily. We are starting what appears to be a long-term bear trend. I mean, you've got over significant periods of time, lower highs and then lower lows also. That series of higher lows was broken a couple of months ago, and we've had even lower and lower since. This is a very good rally that we have had, but it doesn't change the long-term trend, I don't think. And so that means there's a lot of elbow room down here. Next, meal turning bearish also, slowly but surely, long term. For the moment, resistance stopped the rally. That's what my blue line is up there. And pretty accurately twice in the last few weeks. So now I'm looking for a test of 372.5 and a test of 364, and breaking below 364 should put it into a bit of a tailspin for a day or two. Pretty bearish, pretty quick. Next chart. Corn tested previous lows very accurately 3 days ago, two days ago, and bounced back up again a little bit. Double bottom possibilities. Not only that, but it was a decent support level going way back to a year earlier. So this new long-term bear trend, I think we've got, should make new lows in a violent way when we start dropping below 478, basically. And in particular, as it goes down below 452. And that could happen in a very short amount of time. Major downside breakout. Now we are kind of close to oversold, but you can see that occasionally, like under this circumstance back here in March, that we were oversold, bounced into neutral territory, so to speak, and then got oversold again. While prices actually dropped a chunk more, the indicator didn't. So you did have some divergence there, a little more conviction that you were going to get a rally. Anyway, next, wheat, I got to speed this up. Major resistance. We had a sell signal. It was tested almost exactly. They did not get stopped out. I looked at the details yesterday, went down yesterday and going down a little more today. This could work out just fine. It's scary when you come close to your offsetting stops. That's all I can say about that. But you know, that's when people tend to cancel their orders and move them. So their risk is even greater. Big mistake. Next chart. Live cattle, double top potential. First high we've got, if it's a double top, with a bearish engulfing. Then we got overbought as we approached those highs. And here we're doing it again. This is one of those situations, kind of like the S&P actually, where we just might shove through and go up a lot more very quickly. But this is where the toggle switch is, so to speak. If it gets flipped, we will be below yesterday's lows early next week. before Wednesday if it turns negative. And then we've got a chance of breaking this low between the two highs, the double top highs, because there would be. But again, we're basically high and last and looking very strong. So this is something to watch very closely. Next, hogs, overbought, turned down today, finally. Got into very high overbought territory. I think I even mentioned that yesterday, 88, 90-ish is extremely high in resistance. I'm expecting a pretty good move down here immediately. Next, a little more rally and OJ, long-term bull trend, very, very strong. This is just climbing a wall of worry, so to speak, classic statement in a bull market. I can't help but be bullish because the major trend is up. I want to point out that there is a chance that this could be developing a head and shoulder top. There's your shoulder right there. Obviously overbought, and the overbought condition at the head of the formation, and now not overbought, which is not uncommon for the last shoulder high. Maybe. Price is approximately correct, and the timing looks to be almost exactly correct also. Something to watch very closely here in OJ. Head and shoulder top could be a very good downside objective move, especially maybe long-term. Cocoa, sorry. Expecting a short-term retracement down. Also, cotton, the rag, a little bit more strength. Big sideways boring trading range since October of last year. Got to wait for a major breakout one way or the other. And sugar to sweet, a new today bullish engulfing buy signal, ER signal. So we had a double top, double or triple. Its objective to the downside was fulfilled for all practical purposes a few days ago in oversold condition. I thought that the market had no significant support at that price level. It was only a downside objective, and it was going to go down more to this level, the beginning of the blue zone. It hasn't. Now, because of a bullish engulfing today, which I think is going to stick, no sugar intended, it's going to start going all the way back up to 26 and a fraction, and probably get to 30 or higher. I'm turning bullish. Can't help it. Next, coffee. Yesterday, we had another ER bullish buy signal. So far, one day today, next day, we are now long. We hit our green dot. We have a tiny loss, a few ticks. Our protective sell stop is either at 155 and a fraction, or has already started to move up. I cannot tell. This is not running the strategy. I'm just showing the signals. Both are available. So I'm looking for a rally, point blank. I got a buy signal. I can't help myself. I've seen this happen too many times. That's why I developed the strategy. And you guys have a great weekend. I'm back to the E-mini, which is pretty much still up there, high and last. Take a quick peek before we go. Yep, been flat at the tops, and we're right there right now. Enjoy your weekend. Signing off.